What's going on, everyone? My name is Nicholas Merton here at DataDash, and today is November 15th of 2021. Well, folks, I hope you all are having a fantastic day wherever you are. And in today's video, I appear to have ruffled a couple of feathers over on crypto Twitter. I recently put out a thread this past weekend where I talked about my personal belief that Bitcoin would not be surpassing $100,000 before the end of the year, like many people are calling for in the space. Now, I want to go ahead and just take a quick step back, guys, because I not only want to spend some time to clarify some things from my tweet, perhaps I could have typed things better and explained my position a bit better, but outside of this as well, I want to make it very, very clear that there are a lot of people who probably will disagree with my take, who I admire to the fullest degree, right? We can all agree to disagree at the end of the day, and there's a lot of things that I really pull from a lot of the people who would probably take the other side of the argument. So this is not some petty he said, she said kind of game or who's right and who's wrong. I just want to showcase why I personally am rooted in this idea of setting conservative time frame estimations and therefore allowing ourselves to set more optimistic price targets in the long run. And I really think that this viewpoint is as rational as it can get when it comes to the market, and probably why it's a bit contrarian to the general trend, okay? So if you guys can allow me some patience, I want to do both of those things. I want to explain my position in detail and also clarify any misconceptions and just showcase where I stand. So let's go ahead and read through the tweet thread real quick, the controversial take that I had. I said, I hate to say it, but I'm 100% confident we won't see Bitcoin hitting $100,000 by the end of the year. Could it happen in quarter one, right, January through March of 2022? Sure. Could it happen in Q2, right, April going into June? Easily. For Bitcoin to reach $100,000, it'd have to add $661 billion in market cap, equivalent to the last 4 months of gains from back in July to where we stand today. And for those calling for $200,000 for Bitcoin's price by the end of the year, I don't know what to tell you. In this cycle, I'm confident we'll reach $200,000, but these levels in price won't be easily achieved until Q3 to Q4, easily, right? And last but not least, I'm a bull on crypto, but one who's grown to set my expectations with the reality of historical performance. And with each cycle, it gets a bit more boring, to put it simple, right? Decaying returns from the previous cycle, you don't get as great a percentage gains as the time before. Plus, along with that, it takes longer than usual. And we'll talk about that debate here in a little bit about that kind of statement on the cycles taking longer. Now, before we dive any further into this, guys, I want to go ahead and just own up to one thing. And it's a mistake that I think a lot of people make on Twitter when they're eager to get their opinion out or they want to share their thoughts, and they don't review it enough, right? And I'll be honest in saying that I shouldn't have wrote 100% confident. It's not just because I'm backing out of my statement now, but outside of that, I want to make it very clear that, and I've said this before on the channel to be a bit self-critical, which is that no one can be 100% confident in anything. I should have said something like 90, 95% confident. I'm very, very confident in this position, and still though, I could be proven wrong. Bitcoin could go to 200K tomorrow. Who knows, right? But the key bottom line here is I want to talk about probabilities and the reason why I set conservative estimations. Probably very contrarian to about 90 to maybe 80, 90% of analysts out there in the crypto space right now. Even again, some big people like Plan B who's calling for something around the 90K range or above by the end of November, in 2 trading weeks, right? So again, I don't want to be contrarian. I don't want to poke any I don't want to poke any insults at anyone or anything, but I'm just trying to showcase why I stand where I stand, okay? So let's go ahead and kick off into it, guys. Now, we first off need to talk about 2 different ways we analyze cycle lengths. There is the never-ending debate of the 4-year cycle model, the 4-year cycle model for Bitcoin, which generally has this idea of a year of accumulation, right? A year of rally, and then again, the kind of blow off top here, and then the bear market, right? And generally speaking, this repetition of about 4 years, right? And generally speaking, you can see here that on the chart, the last cycle here we had for Bitcoin was about 48 months, right? 4 years from the previous top to the new top, roughly speaking, right? And we can see here as well that if we were to, fill in the full year here, we get roughly about a year, right? We only have price action back here from July of 2010, and then of course the cycle peak, which is very clear here in November 2013. So it's not a full 4 years, but to be completely fair, if you drag it out to try to get the full 4-year time frame, what you actually find is it doesn't line up perfectly in this case with 48 months. So again, this is something that again is probably one of the biggest flaws of the 4-year cycle model, which is it's estimating, and we have to include some period of time where Bitcoin wasn't even trading, right? But this is one of the models that people go off of. Now, let's just go ahead and follow the understanding of the 4-year cycle model, right? The idea is that each cycle is going to be roughly about 4 years, 48 months, which we're taking a look at the monthly chart. So we should generally understand that from here, back in January or December 2017, you get people who interpret it differently. Generally around this range, we should be getting a new all-time high here in January or February, right? So I'll go ahead and extend it out here, right? Give it an extra month here just to play it safe, right? So it's saying between January and February of 2022, we should be seeing our new all-time highs. We should be celebrating, hiya, new highs here. Very exciting stuff. Hip hip hooray, right? But as we can see here, most people are probably calling for around 100K. Some people are calling for 200K, that this is going to be an absolutely monstrous rally, right? Now again, I'm not here to say that that can't happen, but the probability of that happening, I'm going to argue through the video, is very unlikely. Again, just taking a look at the chart here. We're even looking at the logarithmic chart. We're not trying to look at the standard chart. We want to see here, is this a reasonable ask? Could Bitcoin reach 100K? Or perhaps let's take it towards the other more positive argument. Again, we're given an extended month here under most perspectives of the 4-year cycle, right? People believe that it generally started here in January, right? Does this seem reasonable to you? Even on logarithmic standards, to reach 100, 200K, maybe even, let's meet in the middle, right? 150K. Could it happen? Yeah, sure, maybe it could happen, but man, you really got to get one of these kind of months, a 469% return month, or some kind of major blow off top like we saw in 2013, a face melting rally, right? Lots of buy side liquidity. Do you guys feel like something like that could be around the corner? We've already had our ETF announcement, right? Bitcoin Futures ETF announcement. We're certainly not going to be getting a spot ETF for some time, as we talked about in a previous video. So is it going to be TikTok? Is it going to be a billionaire hedge fund manager taking a massive stake in Bitcoin? Who knows, right? Could be any of those. But I'm really scratched for finding what kind of catalyst is going to drive a mega rally like that in price. And even though we are seeing decreasing supply in the amount of Bitcoin on exchanges, I don't know if I see that just yet. Enough to bring that kind of a rally. Now, let's go ahead. And again, this is a visual way. I just want to show you guys the idea here, right? The idea of the 4-year cycle, right? You've got your capitulation phase, right? Where Bitcoin's price generally goes sideways or doesn't do too much, maybe recovers some of the losses from the bear market. Then we start to get the initial rally that takes us back to generally the previous all-time highs, which the idea would have been that was in, roughly speaking, about 2020. And the idea here of 2021, right? You see that it's kind of paired in these 4 waves. 3 years of general upward price action that builds up momentum, and then a bear market, 1 year pullback, right? So that's the general idea for the 4-year cycle. Just want to give you guys that visualization to be fair so you guys can see here which one you want to work with. Now we're going to talk about the secondary one here, the secondary type of analyzing cycles. And it's what we talk about a lot here on the channel, which is the expanding cycle theory. The idea is that over time, we are going to have decaying returns, right? We're not going to do as well as we did, generally speaking, in the last cycle. About the same, if not less. And then outside of that, we are going to take a longer period of time to realize those gains. And the big essential thing that's important to understand is how we measure these cycles. It does not include bear markets, because bear markets, whether you're talking about back here or back here or back here, from really the top, in this case, of the market to the bottom, that's the bear market, right? The correction period of over 87%, we see varying degrees of decay, usually well over 80%. And outside of that, some of them are quite short, right? Now, over the last 2 cycles, granted, we have had about year-long bear markets. But again, historically speaking to Bitcoin, what we care about measuring is the bottom of the market to the top. That's really what we care about at the end of the day. We want to know, generally speaking, when can we expect the next top is going to be from when we set in the lows of the market. Well, we can see generally each time here an expansion of 13 to 11 months. And this is off real charting data we have to work with. This is the longest standing history of Bitcoin's markets that is out there to work with since it's been trading at 6 cents. We're not going off of adding some time where Bitcoin wasn't trading. This is the idea here. Now again, right, It doesn't tell us exactly when the bear market, where the bear market is going to be over in this case, right? But it's generally showcasing here, okay, according to history here, we're expanding on an average of about a year from bottom to top here, right? So that would generally give us an estimation that we're going to be setting in a cycle high sometime around here, if we meet in the middle at 12 months, around November of 2022. And along with that as well, I've even dragged it all the way to the optimistic price target of 200K. Some people said 250K, some say 500K, some go to $1 million. I'm not here to set those kind of numbers, guys. I think we can all rationally agree that we're probably not going to hit those ranges. But let's take a look here what we've got. Back here since December, here in November 2022. Look at this. It's really interesting. It's as if we've almost been kind of riding around this general trend line from these 2 points, right? You can see periods of time where, again, we go exacerbated above that line, we come back down, cool down, we kind of do a zigzagging or S-curve pattern, repeating S-curve pattern, slowly slithering around this trend line. Okay. It's a lot different than the previous cycles where we saw more kind of either euphoric buildups towards the end of the rally. In fact, we came here to the midpoint line here, right, at the beginning, back here in November, right, when we cleared the all-time highs. Now, why am I pointing this out here? What makes this cycle different than the previous ones, and why do I like the analysis of the expanding cycle theory? It's not just because I want to meet my own bias or I want it to go to 200K, right? You talk with people who are using the 4-year cycle, and they'll tell you, oh, it could go to 150, 200K, right? So it's not about, rationalizing for a higher price range. What I want to do here is do 2 things. One, set conservative time frame estimations, more realistic time frame estimations in regards to how the cycle is behaving. And we can see here with this trend line, this is a very fair ask, that we would be able to ride up here and eventually come up here towards around 200K, maybe even do what we did back here, or like the previous few times where we've had corrections mid-cycle, where we round off, right? Now, outside of this as well, this gives us the ability to be able to continue climbing in price, maybe have another mid-cycle correction, a third one, as we had multiple, right, in previous cycle corrections. Okay? So the second thing here that's most important is to understand the dynamics of this cycle versus others, right? Not just setting conservative time frame estimations, but also understanding what's driving these markets. The thing is that if we look back at a lot of the interesting trends from this cycle, we see these overt, exuberant rallies, right? And again, this is what I do think you're going to see in Q1 or Q2 all the way up towards 100K, right? Something like that. And then eventually a correction of some sort that'll eventually set the foundation and go up towards 200K, right? The general important thing that differs this market versus other ones is the amount of credit and leverage in the system. How that started to distort and change markets and the way that they act. And it showcases here that we may not need a catalyst, but it takes time before these euphoric breakouts actually take out with excessive leverage and risk. So I'll go ahead, I'll kind of go through this, right, guys? I want to be fair here. I really tried to look at this through a neutral lens here, right? To be fair, the price range that we're asking for here, for those who are asking for us to go to 100K by the end of the year, it's not too far out. It's a 53% return, give or take, from where we stand now at around $65,889. And that's over 46 trading days. A little bit more optimistic in the sense of daily performance than what we saw back here between July, mid-July, and mid-November, where we stand today, right? It's not too far out. And again, just to visualize it here for another perspective, we can see here that this is roughly about the 7 weeks we have here from when we were talking about, I'll go ahead and shrink it in here a bit more, right? Even though we don't get the full last week here, that's January 3rd, we've got roughly about 6.5 weeks to go here to be able to reach this price target. Not too crazy. And we're looking at the logarithmic chart, so it really puts things in perspective, right? But we need to talk about a couple of the major things here in regards to scale. Market capitalization. We need a 54% increase in market cap for Bitcoin. Now, one thing that a lot of people misquoted me on, and I think it's just because maybe I didn't word it properly, so I'll take the fall on that, is that they claimed that I thought market capitalization was a direct inflow of new capital. So for us to get to a $661 billion market cap increase, effectively a $100,000 Bitcoin, we need $661 billion of new capital inflows. And that's not what I'm claiming. All right, I understand that market cap is purely just taking the supply of a given asset and multiplying it by the market price. And what really is going to help determine if that price or that market cap is going to go up or down is whether or not there are more market order flows on the buy side than the sell side. That pushes pressure on either direction of the order book. It clears either through the asks, or if we're going downward, we're clearing through the bids. All right, so roughly speaking, all right, what we're realistically looking at here for this kind of valuation gate is that on spot markets, which actually determine price, not leverage trading exchanges, not derivatives platforms, not the Bitcoin futures ETF, or all these new financial products that everyone's going crazy about, on spot market, are we going to see roughly, realistically, $100 to $200 billion of positive inflows versus any potential sell side pressure, right? Considering whatever buy side we're going to need to counter the potential sell side pressure, right? Market orders, can we actually realistically get in about $100 billion of upside buy side pressure outpacing any sell side pressure? Right? I think that's a very realistic ask considering the spot market and what we're going to need. Well, to be honest with you guys, I can't think of that catalyst. Not yet. Right? The only thing that I think will do that is the leverage in the system, mixed with the spot buying, mixed with the institutional allocations. I think the thing that's really going to kick that off and the euphoria around that is leverage. There's an important thing we need to talk about, which is the general accumulation phase or sideways phases of price in a leverage-driven market. Right? So what a lot of people are really baffled by, like generally compared to the last cycles, we had this nice parabolic buildup where even though we had corrections, they were quickly recovered and momentum continuously picks up more and more. You can just generally see here, as we draw a line here, the trend, we can see the demand is starting to go quicker and quicker and quicker. And this is even on the logarithmic chart. All right. We take a look at this cycle though. We've got something very, very different. We've had some really euphoric recoveries. This was the second fastest recovery off the lows in Bitcoin's history. You don't even have to really follow the 4-year cycle journey. If you're just talking about from the low, the recoveries off the lows, right? This was one of the fastest and strongest recoveries, the second strongest in the history of Bitcoin. Yet it's our most recent cycle, right? And afterwards, we had a stark correction. Now, I'm going to understand that COVID was a macro event that many of us couldn't have factored in for. But if you don't even want to go to the COVID lows here, right? We can just talk about here, right? Look at that, another 53, 54% mid-cycle correction, right? If you really want to utilize the COVID levels, we're talking about a 70-something% decline, right? Almost bear market territory stuff. But I'm going to go ahead and be fair here, right? Again, just talk about the key point, which is we're getting exacerbated rallies, a 338% return over 28 trading weeks. Are you kidding me? That's fantastic, right? With how big of an asset Bitcoin had been at the time. And then we're also seeing, once we clear through this previous range here, look at that, another 382% return. Major rally here. Now, I do believe something like this is coming. It's not going to be as lucrative as the times before, for sure, right? We're not going to go up 338%. But what I do want to talk about here is more specifically what happens in between these rallies and corrections. We have periods of sideways consolidation. More in the short term, we can see here with the distribution phase here around the previous all-time highs of 65K. You can really see that generally since back here in February, to where we eventually corrected in March, we were going sideways for a long period of time, up to 12 trading weeks, right? And you can be really particular about the numbers, but generally this was the resistance range. Just like how this was the support range and how we were calling, again, whereas a lot of people were calling for 15, 20K Bitcoin, we said this is the best it's going to get, guys. This is, as we looked at earlier, that 53, 54% correction range. This is where buyers are coming in. And they came in each and every time at these lows when people least expected it. But we channeled here for about 10 weeks before we started making a higher move to where we are now. And what I think is going to happen here, because of the dynamics of how this market's working, is that the market really needs to accumulate here, push sideways, and turn this previous range of resistance into new support before we can really build that foundation and spring up higher in price. There's going to need to be a lot more confidence in price here, and I'm not seeing it right now. We're not seeing that blow off top like a lot of people were calling for back a couple weeks ago that was going to kick things off, right? We haven't seen it yet. And I think this is going to probably take a couple of weeks in order to build that foundation and the confidence for people to take on excessive leverage at this price range, considering we've already had a really great recovery here, right? Again, 125% roughly speaking over the past couple of months. A lot of people who got really hit hard here saw a lot of paper losses and now have seen some paper gains are going to want to take out profits. And that's what generally leads us in this sideways accumulation. You have some people who are buying in, but you also have some people who are selling in this case. And until you really start to see on a long-term basis that, oh, the price is really holding up here, slightly above those previous all-time highs, is making that previous resistance support, it's time to make the big bets. The institutions will start coming in. Other buyers will start to come in. And most importantly, in this market, whether we like it or not, the leverage traders are going to start to open up those positions to capture the last major cycle. And this, right, is going to be the foundation that'll set us up for 100K sometime in Q1. And I'm going to make the argument here. Again, this is something that most people aren't calling for because they go off the 4-year cycle theory, is that we are going to be able to set up the foundation. Let me make sure I get the right chart here. That we're going to have another major breakout here where we step up above just like we did here. We're going to come up here towards maybe around 100K sometime at the start of the new year, right? Sometime Q1. And we're going to come back down and then have an exacerbated rally towards 200K. I think it's very, very reasonable to see something like this, guys. No doubts about it, right? So, again, look, I don't want you guys to take what I'm saying as gospel by any means, and that's not what the Twitter thread was meant for, right? But I got to be real with you all. If we look at the macro environment now with BITO, right, this is the ProShares Bitcoin strategy ETF that came out that everyone was raging about back a couple weeks ago. It's a futures-based ETF. It's not spot. It's not going to be setting that spot demand that we're looking out for to actually drive prices. Much better off betting that leverage is going to be the driver of that. People borrowing money that isn't there, stablecoin, dollar liquidity, in order to buy more crypto, that's going to drive up the price. Not to mention BITO's volume is quite abysmal. For something that was so hyped up, only a couple $100 million of volume every day. Right? That's including buying sell side pressure. Now GBTC, right, still holding up pretty good if you look at dollar adjusted volume. Still, we haven't seen that breakout of volume just yet. And I think that might come with price. But again, nowhere near what we saw back here in January that really drives that magnitude of upward price. And Google Trends, hey, it looks like it's pretty good. It looks like it could be popping out, but probably not over the next coming weeks. Probably over the next 2-3 months, right? Going into Q1. Now you guys can see, if you really think about it, and I'll be honest, I'll say this in hindsight, for those who may still disagree with me, we're really not too far off in our perspectives probably. I do believe we are going to visit 100K, right? And maybe it's a bit petty to focus on the end of the year, but my general thesis with a post like this is something that I will always drive to you guys here on this channel. There's nothing wrong with having more conservative time frame estimations, expectations, roughly speaking, if you will, for how things are going to get to these price ranges we have in mind. I'm up there with everyone on 100, 200K. I think it's pretty certain that we're going to get something in that range. But how we're going to get there, how long it's going to take, I'm sorry, I got to say, even a lot of the people I admire in this space, generally I think have too short of time from estimation. I could be wrong on that. Bitcoin's done some crazy things before. But when we talk about these increases in market cap, right? When we talk about, gaining $661 billion in market cap for Bitcoin, all the while it doesn't need $661 billion of buy-side pressure. You do need much more liquidity than when we made those previous parabolic rallies in the past. That's something that people ignore. They completely separate market cap from purely it's easy for us to make another 200-300% gain. And that's not entirely true, right? When you're talking about bigger valuation, H Bitcoin being worth much, much more, you're going to need matching inflow capital in order to leave about similar rallies, right? You can have supply contraction where I see the Bitcoin going off exchanges. I know about this, but you are going to need a lot more liquidity than you needed in the last cycle. And I got to be clean with you guys. I just don't know yet if we know where that's going to come from. Some of it's going to be leverage, absolutely. But what's going to be that macro event that brings back the confidence for the finish of the cycle? We've had that every single time, all right? Back in 2013, it was Silk Road. Back in 2017, we had the rally into the Bitcoin futures contract launch, the institutionalization of crypto. But if the Bitcoin ETF didn't do it recently, what's going to be that thing that's going to solidify it? So I'm a passive optimist. That's what I say, guys, which is that I do believe we are going to reach some of the highest expectations, the 200K price tag or something close to it, but it's not going to happen overnight. And look, if I'm wrong, guys, I'm wrong. Hey, if anything, things happen more optimistically than I presume. That's great. But if it doesn't happen in that optimistic way, and your time frame estimate is there, more than anything, it's just going to be painful. And you're going to start to doubt whether or not Bitcoin can actually reach those price tags, which I think we all know it realistically can. Considering the inflows to Bitcoin and crypto markets versus gold, towards equities, where millennials and Gen Z, the next investing generation, is putting their capital, for the first time, we have institutions more than anything chasing retail traders, everyday people like us. And that's a pretty cool feeling. I'm confident on crypto, but I think great things take good time in order to make a reality. Anyways, I've rambled on enough, guys. Whether you agree or disagree, if you could consider dropping a like and leaving a comment to share to me what your thoughts are. I'd love to hear from you guys, right? I'm all ears for hearing different perspectives, but I wanted to share mine here today with you all. And I hope it proved in some degree valuable for you guys. Anyways, I'll see you on the next video. Take care. Have a wonderful rest of your day.